Hi everyone, thanks for checking in. This is Adam Coben here at Low & Co, and today we're looking at the February results for the Wellington data, Wellington real estate market data, of course, compared to February a year ago, and in some cases 2 years ago also. So folks, finally a little bit of positive news on the horizon for those of us who are selling or indeed sellers. It's been pretty much good news for buyers for the last 15-16 months, and finally a glimmer of hope for sellers, and that is that the Wellington values actually increased in February. Now admittedly it's 1 month's outcomes, so let's not get too excited. It's not what I would call a trend just yet, but nonetheless it's certainly a positive move from the series of price falls we've been seeing reasonably consistently. Overall, I maintain my belief this is more evidence that the market has broadly stabilised in Wellington. My advice to buyers continues to be get amongst it, do not wait for things to get better. I don't think they really will. So let's look into the detail now. Median sale price, February 2023, 790,000 versus February 2022, 995,000. That's down 21%, no question, that is a big drop. If you follow these videos, you'll know I don't pay much attention to the actual quantum of the median sale price because it doesn't just reflect underlying values, it reflects equally as much the mix of properties that are sold, which can change from month to month, of course, so that would produce a changing median sale price when underlying values aren't necessarily changing. Nonetheless, the trend, the overall movement and the trend is instructive and interesting to look at. And in particular, if you see there, obviously the trend has been downwards over the last 15-16 months, but over the last 6 to 8 months, broadly since about July last year, median sale prices have been broadly stable. But let's look at the Real Estate Institute House Price Index, and this is the data I encourage you to pay attention to when thinking about whether underlying values of real estate have moved and how much by. That is Real Estate Institute House Price Index. So the Wellington result there up by 2.2% in the month of February. Interestingly, down by 2.1% over the entire 3-month period, December, January and February. So 2.1% over a 3-month period, a reasonably small or modest fall overall in that 3-month period. So again, values are stabilising. If you look at the last year, or in particular the fall in Wellington since the peak at 22.9%, that is still leading the league table. So that is, Wellington is still the region with the greatest fall since the peak. However, compare it to Auckland. Wellington, as I've been saying, Wellington has been stabilising over the last 6 to 8 months or so, and Auckland and other parts of the country have continued to try and catch up to a certain degree, and Auckland and Wellington now are almost at par. Auckland down 21.6% since peak versus 22.9% since peak in Wellington. Looking now at the house price index growth charts there, you see the blue line is the monthly movement and the orange line is the 3-monthly movement. Clearly you can see the blue line bouncing up below zero for the first time since about early February 2022. In July 22 we got to about zero, but we haven't really been in positive territory since February 2022. Now, February 2022, that was an outlier, as you can see. So it's possible that February 2023 is also an outlier, and we will return back to lower numbers, possibly even negative numbers come March. But again, if you look at the trend there, you can see that value drops have been considerably slower since July 2022 versus the 6 or 9 months prior to July 2022. So more evidence Wellington market has been stabilising. New listings now. New listings coming to the market on a monthly basis. February 2023, 525 versus 990 in February 2022 and 779 in February 2021. So this is absolutely eye-watering. That is a 47% drop in new listings in February versus February 2022. And indeed, ever so slightly fewer listings than we even saw in January. Now, typically February is a significantly bigger listing month than is January, but in this instance, we have seen roughly the same number of listings in January and February. So there's no question that the number of listings coming to market we're seeing them be significantly tighter than they were 12 months prior. And this next graph shows that very, very clearly. So the blue bar chart there shows you the number of listings coming to the market as a function of what we saw 12 months ago. So a decrease or an increase compared to 12 months ago. Blue lines below the zero horizontal axis means fewer listings coming to the market, and above means more. So you can see quite clearly the last 6 months we've seen all unanimously at least 20% fewer listings coming to market than 12 months prior, but the February result is the most stark amongst them, with that huge 47% drop. So that is extreme tightening in the number of new listings coming to the market. Again, this is positive news for sellers. A tightening of new listings coming to the market does not encourage price falls. It encourages price stability, or possibly even upwards pressure on prices, but we're certainly not seeing any evidence of that. But it certainly will produce or provide a floor for values. How many sales are taking place? And we are seeing a similar picture here, 453 in February versus 546 in February 22 and 763 in February 21. So compared to a year ago, 17% down, compared to 2 years ago, 41% down. So 17% down is definitely less than a year ago, but it's nowhere near less by the same degree that we're seeing a contraction in the number of new listings. So we're seeing an interesting dynamic here. Vendors pulling back from the market, buyers pulling back from the market. Buyers have been pulling back from the market longer than vendors have been pulling back from the market. But for the last 6 months or so, vendors have been pulling back from the market to a greater degree than buyers have been. And we're seeing a little bit of frustration come in amongst the buyers to a certain degree. And as a result of all of this, we're seeing, not surprisingly, an increased level of activity from buyers at open homes and generally in the inspections part of the process. So this next graph again shows you the change in the number of sales versus 12 months prior. So clearly you can see that since the middle of 2021, the number of sales taking place has been less than 12 months prior. So it's been going on for longer than the decline in the number of new listings coming to the market. But again, you look at the last 4 months in the change in the number of sales versus 12 months prior, and the degree to which we're seeing fewer sales taking place is getting less. So in other words, it's moving back towards par versus 12 months ago. So only 17% less than 12 months ago, versus we've been quite commonly seeing 30%, 35% over the last year or so. So that result is easing. Relative sales volumes have been falling consistently since mid-2021, but the degree to which they have been dropping is easing. How long is it taking to sell a property? Now this is pretty stark indeed. 69 days in February versus 48 a year ago, 30 days 2 years ago. 69 days is the longest recorded median sale duration in Wellington since records began. Now what I don't know is when did records begin. I suspect it was something like 20 years ago or 15 years ago, something like that. It's certainly way, way longer than I've been recording the data back in early 2015, and significantly longer even than when the market was closed for lockdown. So there's no question properties are taking some time to sell. Inventory, this is the number of weeks worth of supply we've got on the market if properties continue to sell at the same rate. Again, another interesting trend, and this indicates again a stabilising market. 15 weeks worth of supply in February versus 13 a year ago and 7 2 years ago. 7, very, very tight market. 13 up to 15 in the last 12 months. Interestingly, 15 weeks is exactly the normal. It is exactly the average over the last 10 years. So we're back to what we would call a normal market in terms of the amount of inventory. And again, the shape or the pattern or the trend that you can see there is interesting. We peaked up at sort of 23, 24 weeks worth of inventory in the middle of 2022. Then we saw significant and consistent reductions until December. December 2022 and January. And we did see, if you remember, the market softening quite a bit in December and January as a result, we suspect, of the really scary announcements in terms of the inflation result for quarter 3 and the Reserve Bank announcement in November, which really did frighten buyers somewhat, that they thought perhaps interest rates were going to stay longer, higher for longer, and that had them pull back. But we certainly have seen in the last couple of months here at Low & Co, and I'm sure it's reflective of the rest of the market, that buyers have been coming back out of the woodwork and getting engaged again in the process of looking at real estate. How many trade listings we're seeing? 2825 as of today in March versus 2795 a year ago and 1126 2 years ago. 2 years ago, 1126, that was very, very low stock levels indeed. That's about as low as we got in this whole cycle. So if we look at March, now, like right now compared to a year ago, basically the same, 1% more. Let's not argue over 1%. That's less than statistical significance, I would suggest. And so interesting that for the first time in quite a while, we're seeing the same amount of stock on the market as we saw a year ago. Again, you look at the shape of the graph there, we are seeing gradual increases in from January to February to March, but that's seasonal, and the degree to which it's increasing is somewhat subdued compared to normal summer seasons, and that will be because the amount of new listings coming to the market has been suppressed way more in the last few months than the number of sales has been suppressed in the last few months. And again, in this relative change graph here, you can see that we've gone from 160% more Trade Me listings than 12 months prior, back in the middle of 2022, to the same, broadly speaking, the same level of the same number of Trade Me listings as we saw a year ago in March. Again, consistent with my claim that the Wellington market is broadly stabilised or stabilising. So in summary, folks, Wellington values are up for the first time in February and down only slightly in the last 3 months. New listing volumes are low, and very, very low indeed, 47% down since last February, which is an extreme number indeed. Sales volumes also down, and down consistently for the last 12 months, but in recent months, not down to the same degree as we have seen the new listings volumes being down. Duration to sell is, however, the longest on record at 69 days. Inventory is back down to normal from relatively more inflated levels over the last couple of months. Trade Me listings are level with a year ago and increasing only slowly compared to most seasons. My claim is that the Wellington market has been stabilising and is now broadly stabilised. Buyers, get in amongst it. Don't wait for things to get better. Take advantage of these conditions while you can. Thanks for checking in. It's Adam here at Low & Co, and see you next month. Cheers.